So we'll go into the financial accounting, new accounts payable, accounts receivable, vendor accounts, master data, preparations, and the first thing is account groups and street layouts. We've been using is this one 001, that's the general vendors. We'll look at the details. And this is the field status, right? So there, instead of 3, there are 4 here. So there is a suppress, required, optional, and this. Let's say for example, optional, street 2, street 3, street 5. Let's say I don't allow PO boxes, all these things, and I click on S. To cancel now. What's the transaction to create a vendor? FK 01, right? I'm copying it. I'm using 001. See, for example, right now, let me try to hide these two as PO box and the postal codes. PO box, postal code, all those things. Save it. So they're gone, right?
Yeah.
So they're gone. So that's how we control the the field status. And again, go back and check the general data. This is the address part. This is the communication part. Then you can go into the payment transaction, the bank details, the alternate payee. Typically, if you have to have the bank details, if you're paying ACH for all the vendors, you can say required entry, right? You can make those things. And there are some that are really required, which is the let's see. In the purchasing data, for example, the order currency, right? What is the order currency and whether it's a required field? So that's already checked as a required field. So pretty easy, same as your account group, GL account groups. Practice through it. There are so many here, general vendors, alternate payees. Typically, in a company, there's something called a PO vendors and non-PO vendors. PO vendors have already need to have a PO, non-PO are the financial vendors. And typically companies have just a grouping. They have minority vendors and local vendors and foreign vendors. These are the typical groups that we see.
You can define their own.
Oh yeah, anything you can just copy, take an existing one, just copy it, and then create the variants, and then create those things. Yeah, same, right here, right? Right there. I'll take this thing, copy. Yep. 1, 2, 3, 4, 5, 9 is missing. I'm going to take it, make a 9, enter, and I got it. It's nothing, nothing fancy. And right there, I go and just cancel it. Another big thing about your vendor thing is really the number ranges, right? So you have the same number ranges just like what we saw for your account groups. Same concept. And then you create it, and then you go back and they say the 01 is really the 02 number range. So 02 is what? Let's go look at 02. O2 is in this range, right? So I did create 00426 last time when I created 427. So now next time it's going to be 428. And you can always flip through. So different different account groups should have different number ranges. So the pretty identical concept from your GL accounts. And then if it is a minority vendor, you create a minority indicator and a description to it. And then if you go to the field status, if it is a minority vendor group, then make it mandatory, and you can put that in there.
So FR part is the financial accounting and APR is the new financial accounting.
No, new is the new GL. Actually, it's not nothing to it. I'll tell you what that is later.
Okay. I think the latest update that's the one.
Yeah. The key things are account groups, screen layouts, and your number ranges. And there are something called industries, account clerks. I mean, there are kind of miscellaneous things you can figure it out. Okay. So this and this is we should be able to cover the vendors pretty much. And the big part for the vendors is this called direct transfer workbench. It's called LSMW, and that will be covered in the technical class. Okay, there will be a technical class at the end of this class. I'll just make it online, and there are like 100 topics that I have to cover through in a day. Okay, that'll be part of that LSMW class. And that should cover your vendor master data. And let's get into the real stuff. Okay, this is the configuration for the F110. F110, right? We saw the parameters: proposal, payment run, right? So these are all the steps required to do the automatic outgoing payment configuration, and there is an easier step to do that. And you can go through that list, or you can just go through. There is one transaction FB is EP, and you can do everything here in this way. Okay. Typically, people try to, this is much easier way than going through the other way. One, set up company codes. Basically, all the company codes that there's no changes. Basically, all the company codes that you are trying to run the payment. There's no change over here. And the next thing is the paying the company code. So you have to set up the company codes that are typically have bank accounts, and they typically are the paying company codes in this example. In the F110 one we run, the paying and payee are the same thing, 1,000. So we had no problems. But if the invoice is, we'll try to run the scenario through. If the invoice is for 2,000 and 1,000 could be the paying company, and you can put that when you're actually running the F110 configuration. Okay, this is the paying company code, 1,000, and there are some control data. What is the minimum amount for incoming payment? Is I'm not gonna pay less than 50 cents, things like that. What is the minimum outgoing payment? I'm not going to pay anything less than $2. And there are some basic, very easy settings here. Okay, these are the EDI forms. So if you are a paying company, and if you're doing a payment advice to the vendor, okay. So SAP script is like a scripting language, just like a JavaScript. It's like a scripting language to create the forms. So how the correspondence is going to go out, how the letter is going to go out. So for this paying company, the form that is used for the payment advice is F110_D_AVIS. It's a SAP script form, and that form typically gets created by an ABAP developer. Don't worry about it. It's like like a code. They do drag and drop and create the letter. It's like it looks like a payment advice form. It's already, yeah, it's already.
Like the attachment, right?
Yep. Yeah. And if you're doing an EDI, if you send them an EDI, there is also EDI combination form sheet, like document that will go to the vendor saying these are the EDI details.
There is one.
Yep.
There is attachment that you can do, right?
Mm-hmm.
Tends to keep all the data.
And you can also create some sender details. What do you want on the letterhead? What do you want on the footer? What do you want to look like signatures? All the fields, the standard fields that you can put these. You can have to put this in the forms that you create or in the communication that you create as a paying company. And then comes the payment methods in a given country. So not every country has the same payment methods, right? So in the US we have ACH. In India we don't have ACH. So, and in Europe they have SEPA and we don't have SEPA here. So these are dependent on the country. So each country will have its own specific payment methods. Let's say US. You go to US. Yep, we have ACH, we have check, we have a bank transfer, and we have cross-border wires and so on and so on. Okay? And you can copy an existing payment method and create a brand new payment method. Let's say you're creating a PayPal, you can copy it, and maybe you can say P. Something like that, okay? And this is definitely not going to be a check. It's probably going to be like something like a bank transfer. And then you got your PayPal, okay? And you click on the check. And if it is a check, what kind of currencies are going to allow? So in the US, I'm just going to only write a US dollar check. You could have a foreign denominated bank account, but you can control, things over here. And if it is a check, and what are the permitted destination countries? So some countries probably you don't want to send the US dollar check. So what are the either US or Canada or Mexico? You can say, hey, what are the destination countries? So basically here you will define payment methods by country, right? Pretty self-explanatory, right? Payment methods by the country. And then you also do, this is at the country level. Now this is at the company code level. You can also control payment methods by company, code. Once you have first you have to create the country level, and then you have to copy them to the individual company code level. Why? Because it just gives you a more granularity. Some company codes have a rule saying that I only want to do wire transfers. I only want to do ACH. I only want to do checks because I don't want to do ACH. Whatever the business rules are. Nowadays, pretty much in the US, it's a 90% of the people, 90% of the time, people do ACH because it's the most cost-effective way of doing things. So you may say, for company code 1000, there's only one option, ACH. Otherwise, you have no option. So that could be the policy. Either you take ACH or you don't take the money, because it's least cost-effective way of sending the money. Some brand new countries, some company codes, they could come up with their own custom way of paying things. So this screen here called FBZP, F110, FBZP, F110, FBZP controls. F110 controls the front end, FBZP controls the back end. The code kind of go in tune with both. And then comes the bank determination. Why do you have to determine the bank? A company could have many different banks, right? Many different banks. When you're paying, you do specify the house bank, but they could have house bank could have multiple accounts. So it kind of determines the order in which you pick the right bank account.
Basically, which is big, has multiple bank accounts in the same area. For example, US Parliament, they want that payment to be going to a specific branch.
Yeah, 1000. Let's look at the routing order. Here it says order number 1 is house bank 1000. And if its currency is GBP, then use the house bank 2000. I'll tell you what house bank is. House bank is like a bank. It's in the banking section. We have a card in there. House bank will have a bank, and then each house bank will have a GL account in it, and each account will be tied to a GL behind the scenes. So this is the we'll get to this section when we get to the banking section. So house bank is like a bank account basically, with a bank account. So my first account is use this house bank 1000. My second priority, if it is GBP, is use this one. My if it is dollar account, and this will be the first priority, but this is my second priority would be use house bank 3000.
So you're talking about, let's say in one account, these are the real accounts.
Yeah, a company could have a company could have New York, they could have Chase, they could have Amagi, they could have Fifth Third, they could have DNB, they could have 10 different banks, and each bank could have 20 different accounts. So this is just sorting through which account gets picked when actually making the payment.
Basically, whenever the payment is made, it should be going to this specific.
This particular account, yeah. There are certain accounts designated as disbursement accounts, and those are the accounts that they maintain cash in those things. And the other accounts, they may not even be looking at those things. You don't want to be writing a check from the wrong account. So this kind of maintains the right the sequence of the accounts. Yes. And then if I clicked on the the account ID 1000, now this is going into sub accounts, like in the actual bank accounts within the house bank, and which sequence that you need to be hitting or clearing those things. So if it is C, then use this account. If it is if it is ACH, then use this account. You can use that. And if it is GBP, use this account. If it is medium of payment is wire transfers, and if it is ACH, use this account. It's like a combination. It gives you like an Excel sheet where you can pick the amounts. House bank is, don't get confused with the term. House bank is the bank account. House bank 1000 is Chase. House bank 2000 is Bank of New York. House bank 3000 is Bank of Mellon. It's just the bank account. It's the bank that you're dealing with. Within the bank, you only have one, but big companies have multiple accounts. Okay. Yeah. What? Even the bank I bank with Chase, I have 5 different accounts. Not just my house bank is Chase, but I have 5 accounts within the Chase. Okay. I maintain one for checking, savings, my IRA, retirement, whatever. So companies typically have one account for disbursements, one account for incoming payments, one account to pay salaries, one account to whatever. They have maintain a lot of different accounts just to see where the movement is going from. They use one accounts for different movements.
At the end of the year, they would actually accumulate the
if you only have one account and everything is going to, it's going to be chaotic, right? It's going to be pretty messy. You don't know. Yeah, you don't know where what's what. You cannot track exactly. Just like same concept, GL accounts, we have multiple GL accounts because you want to track them, right? Same thing, similar concept. Same thing here. You have some defaults. What are some of the available, outgoing payments, for different bank accounts, and we can also limits for different accounts. And value date typically is how many days, when you want this to be effective. Typically, it's 1 day. When you're sending the payment, you validate it tomorrow. That's going to be effective. No, it's nothing to do that.
No, I'm just saying validate. It should be 30 days.
Oh, validate, yeah. In banking transactions, where you're making an EFT today, right? ACH today, which is validated for tomorrow. That means it's going to be effective tomorrow.
Yeah.
Right? It's not going to hit your GL until tomorrow. You're sending validating it for tomorrow. And this is the house banks. You can do it from here. You can do it from the banking side. And house bank is just the bank account here. 1,000 is my Deutsche bank accounts. Within a house bank, you'll have bank accounts. Each account could be disbursement accounts, my remittance accounts, inbound accounts. You can maintain multiple things, or you can maintain multiple currency accounts too. So this is a one single transaction FBZP where you can do all of the configuration for our famous program F110, right? F110. And then always try to connect things that you've seen versus this is what that we have created. Parameters. Where is this coming from? Obviously, this is coming from vendor master, right? Company code, you know where it comes from, right? So it's you created the company. C, this is what payment types come from the payment type. There is nothing here. There is nothing here. Okay, try to focus on F110 and FBZP and see if we can practice creating creating these parameters, creating a proposal, creating a payment run, and going into this go to section, and then looking at all the documents. So you should be able to comfortably be able to delete a proposal, delete a payment run, rerun a payment run. Display, the logs behind the scenes, what happened. It'll show you very detailed logs. If there is any issues, problems. Right here it says no valid payment procedure for USD. If there is any exceptions, it will show you all those exceptions in the log. And if you're an AP consultant, this is, at the month end or at the quarter end, you'll be looking at all these things being very detailed, looking at living and breathing these particular transactions. Okay. And if this is a wire payments, at the end of this thing, you'll see both the financial documents gets created and also the physical documents getting created, the actual documents that go to the banks, actual documents that actually go to your providers. You have to look at those also. So if it is a check, you usually get a check file. Large companies don't print checks. You get a check file. So check file has all the information to create a check, and you send the check file to a third-party company to print the checks. And if it is an ACH, you get a file called ACH file. You send the file to the bank. If it is a wire, IDOC gets created. IDOC, you take the IDOC and transform that into a file a bank will understand in a bank format, and you send that to the bank. So for different mediums, you create different types of files that go to different providers. And this is a very complicated program. This is, the nuts and bolts of the whole SAP user front end. Yes. Yeah, lot happens here. Yeah, check file gets created, goes to a third-party vendor, the file gets transmitted, and you need to receive it, and they will actually print the checks and make the disbursements. And the checks will be sent to the vendors, and the vendors cashes the check, and it goes to the bank clears it, bank sends you a cleared check file. Okay, and then before you send these files, you have to send the bank a file of all the checks that you have written. Right? It's not these are not paper checks, they're electronic checks. So bank needs to know the checks that you issue. So you actually send bank's issued check file. So bank is going to put it in their system, these electronic checks to match the inbound check that's coming. Right? This is not a checkbook. This is an electronic checkbook. System is going to start printing 3,000 checks in a run. It automatically generates the check numbers, right? And check numbers on the file, and then you're telling the guy to print the checks. So you need to tell the bank that you printed check number 3,000. So you need to send the bank check numbers. Yeah. And also the control totals. You need to tell the bank what exactly to expect, what check to expect for what vendor. Okay, it's called the positive pay file. It's like a double check file, so that vendor doesn't copy the check and then change 3,000 to 30,000. So the bank is going to reject it. So you tell the bank ahead of time, this guy can only deposit 30,000, not 300,000. Okay, so it's a paycheck file, and there's a positive pay file, and there is there are so many things in this one. It's like in money, you're dealing with a lot of money here. I mean, each run we print like $600 million checks each week. So I mean, you have to be very careful how these things are going, because when it goes out, it's going to be a big issue for a lot of people. Yeah. So
get any double checking for them.
Huh?
You won't be any double check for like for the huge amounts. Nobody has to sign it. It's approved or something.
Oh, definitely, it has to be approved. Yes. Oh yeah. The whole thing is there are workflows here. That's what the proposal run is, right? That you do the proposal and you save the proposal, and people review the proposal, people approve the proposal, and the proposal goes into the run later on. And there are multiple proposals. There could be a proposal for US companies. There could be a proposal for Europe. There could be a proposal for individual companies. They do multiple proposals for multiple payment configurations. And then you can go into this exception list. In this case, everything is throwing an exception, and you need to go down below and then see why these things are getting exempted. The bank is not correct. The discounts are not getting correctly calculated. The payment medium is not right, and there could be so many things. Right here, no payment method found. And then another reason is item is blocked for payment. There could be means invoice didn't match the tolerances, right? Yeah, the tolerances. So let's go back here. This automatic payment run. We looked at set up all company codes. There is the paying company codes, payment methods for company codes, bank determination, and we looked at we looked at pretty much all these things. So you can do it from here, or you can do it from there. Same thing. There's no difference. FPC, right? FPC, yeah. And that's an interview question. He said, do a mock interview. That's what they're going to ask you. Mock interview. Walk me through the entire payment process where you need to add. You already talked about, right? I buy something from the vendor vendor sends invoice, use FP60, post an invoice, run F110, do the parameters, right? Payment proposal, the payment run, look at the exception list, look at the actual GL accounts that got cleared, right? And then do FBCP, and you need to say paying company, payment terms, automatic. You should be able to kind of tell the whole cycle, including the clearing, the actual entry, debits, credits, the whole cycle down to the element. And you're done. Then that's it. Yeah, and then the one thing that you're going to miss is the technical part, which you're going to get at the very end. You need to be able to kind of dig into the actual files that get created at the very end. And these are all manual outgoing payments, right? We talked about the tolerances. Company code 1000. And you can kind of determine the tolerances for payment advices, permitted payment differences for automatic write-offs, and also permitted payment differences, 5%. And you can do you can also prepare cross-company code payments manually, set up some layouts.
Do you think the companies prefer to set this parameter for just small differences and all those things? Because small differences, like for example,
Rounding.
not rounding, but companies say that if it's a loss of 200, just go ahead and get rid of it. I mean, just go ahead and
Yeah, I mean sometimes they don't want to deal with nickel and dime. Yeah, they it depends on it's optimization of the cycle. You need to be able to optimize the cycle.
So I don't think they would be going into the technical details, right, of that. So
Yeah.
Do we have anything like, okay, if it is paid like 1,800 is okay and 100 is exceptional?
And that is an exception.
Do we have anything?
media usually they see the codes, right? The EDA code.
Yep.
You just have to enter the code.
You have to set up. You have to set up the EDI. You have to set up the EDI. There is transaction called W20. There is like a.
Yeah, but when we actually receive the invoice from the EDIs, it's all codes. Just we have to add the numbers because there are columns over there.
Yeah. Mhm.
It automatically picks the numbers and the amounts, and we just have to put that, and that's it. It gets here.
Yeah, I mean, yeah, and then the big thing is the automatic account determination process. You have to determine, you have to set up a lot of accounts behind the scenes, exchange rate differences, discounts, rate, rounding differences. A lot of automatic account determination that you have to put it in when F110 runs. Yeah. I think that the challenge is, I mean, yeah, I can run F110 easily for 1,000 because everything is set up. Create your own company code and try to run F110. Then you will see how difficult that is. Get your own company code and try to run F110.
We can use the existing one, right?
Yeah, of course. Yeah, you can just use 1001. Take the second. Yep. Yeah, it shouldn't. Yeah, if you take the existing one, run it, it shouldn't take that long. Another thing for the AP is really the terms of payment. Terms of payment we talked about 001 is pay immediately and net 30, net 40, net 45, right? So this is the very important one also. Click on the details. 001 is pay ASAP. Means this is applicable for both customers and vendors, and there is no percentage. See, everything is blank here, right? So if I pick this one, this is net 30. So say if you pay in less than 14 days, calculate 3% discount. If you pay less than 30 days, 2% discount. But this is net 45. So the clock starts ticking using the baseline date, right? Baseline date. And for this payment term, only the payment method C is allowed, and this is allowed for both customers and vendors. and you just give it text, and the baseline date for each document date, not the posting dates. I mean, that's when the clock starts ticking. And you can take an existing one, copy it to whatever number that is, and let's say I'm creating net 90, so I can change it to net 90 days. If you pay in less than 15 days, I'm just going to get a 10% cash discount, and if I pay in less than 45 days, I'm just going to get a 15% cash discount, and my payment method.
Sometimes we get trade discounts. What about that? I mean, can we actually configure one here?
Click what?
Trade discount. There is one trade discount. There is one early payment discount. So
This is the early payment discount.
Right,
This is the early
so I'm
payment
saying
discount.
about the trade discounts is when
Trade discount is, it has to be on the invoice. You have to configure as an automatic account determination. So based on what? Trade discount is like freight, or something like
no, I
that.
mean, I think when we go for international accounts, there are trade discounts.
Yeah, this is the early payment discount. This is the early payment discount. You can set all those things, put an explanation. Hit enter 2 is already there. I'm just gonna click maybe 99999. The percentages in the descending.
So we have to go 15 minutes.
I have now a new payment term called 999. This is early cash discount. This one. You can also set a terms of payment installment payment. So someone is going to say, I'm going to send you invoice, but you're going to say, oh, I'm just going to pay you in installments. You can set that up too here. And here you define the actual cash discount, like what is the base for giving the cash discount? Is it the net? Is it the gross? What is the base for the giving the discount?
Mostly the base is invoice amount, right?
You can say, yeah, you can say net.
So what else is
Gross or net, that's it. I mean,
gross is net, but I mean, invoice is the invoice price, right? Everything is gross is net. So
I hear it's saying in discount base is a net. You check on it's a net, then it's not, it's a gross. Okay, yeah, the big things here really is the FBZP, F110, payment terms, EDI, and also taxes. I'm going to hold off on taxes because it's a little bit more complicated, and I want the other tax lady to be here, so I want to get, she has some real business experience, so I want to get some the actual tax process that happens in the company. For its taxes, it's a lot more complicated than what we saw.
really?
Yeah.
We just have to define, right? What's the total tax on it?
Oh my, no, it's just a lot more complicated. Taxes.
I mean, it's defined individually as to what company you deal with, what are the taxes for that, what is the import-export tax, where is there are trade. I mean, there are taxes related to trade and all these things.
Mm-hmm.
There is more.
Yes. Yeah, we'll wait on that. Tax, SAP tax consultants, you make at least, you can charge like $150 to $200 an hour.
There is a good demand right now.
And it's not easy. That's why that's why they pay that much, because it's not easy.
If we sit and just play around with SAP, now we can build more and more ideas.
Tax you cannot. You have to seen it. You have to have real-time experience. You have to be in the field to learn
We
it.
have to start somewhere.
Oh, for the taxes?
Yeah, I mean, we have to start somewhere in order to actually reach somewhere.
Oh, I mean, yeah, you can get on a project where tax is one of the things, and there'll be a tax consultant working, and look at some documents and get some real-world experience. Yeah, that's how we do it. The thing is, taxes, you you go to some other tools called Sabrix and Vertex. It's an RFC connection based on tax jurisdiction codes, and tax jurisdiction codes are all over the place. I mean, there is at the vendor level, there is the company code level, there is at the plant level, and there is at the cost center level. There are many different tax jurisdiction codes at many different levels, and there is a very complex procedure to how which takes precedence when you're actually getting the tax code back. The rules are very complicated.
You have to have like that.
Yes. You have to pass tax jurisdiction code, you have to pass the base amount, and you have to pass the input code, output code to this program, and it returns you the tax percentage. There is a tax exemptions, and then sometimes you are the tax collector, and then you accrue the tax. Sometimes the vendor pays the tax. Sometimes you have to configure all those rules in that interface in the Vertex and Sabrix interface.
Defined by code, because I remember it was by code. Like if you write ZDD, for example, then it would actually go into a non-tax fund. That means the vendor is actually paying taxes.
Yeah, we'll cover all that. We'll cover all that, but I'll cover it in a different section, different time. And then the taxes also are on the PO side. When you create a PO, there is a tax jurisdiction code, and then you calculate the taxes, and that flow into your AP section, and then they go into your GL account tax, and you approve it, and you review. So reconciliation. We'll leave the topic at different times, and let's see if we covered everything here. Let's go to one more time. So the account groups are easy, right? So we talked about it. Go into financial accounting, APR, vendor accounts, master data preparation, create accounts. You can just copy as many as you want, and then assign into the field status, assign the number range to the vendor accounts, and you suppress, create optional, required, and then you're all set to go from that. And the same thing, when you do the vendor account groups, same thing for the customer account groups, right? Exactly the same thing. When you talk about FB60, FB70 is the customer invoices. Those are the outbound invoices. Try both. Okay, FB60 inbound, FB70 outbound. The only difference is flipping the customer to the vendor. Everything else looks the same, pretty much the same. Everything remains the same thing. Vendor account groups, customer account groups, exactly the same thing. Okay.
I think the process for the accounts payable is order to cash, right?
Order to cash. And then the first thing in the thing is the payment terms. You start right. Payment terms is cash discount in 001, 002. We already created payment terms. The key thing is just we had to work with the users. What is the cash discount? What is the baseline date? And just create that. So it's pretty easy.
So now if you do all these things, right?
Mm-hmm.
AR, right? Oh, yeah. So AR, we don't have those steps and anything? Obviously.
Everything same, exactly the same. Exactly.
Anybody pays us, right?
Exactly. Everything is.
Exactly without tax or tax. Put some tax return here, right? Tax
Everything the same. Yep. So now here they're define accounts for cash discounts taken. So when you have a cash discount, when you're paying early, which GL account it needs to go to. So you need to go to financial accounting, receivable, outgoing payments, define accounts for cash discounts taken. You're going to ask for a chart of accounts, and then you go in, click the transaction called SKE. That's the transaction that triggers when you take the cash discounts, and you put the GL account. So 827100 is where you book the cash discounts, right? So when your invoice is $1,000, when you're paying early, there's a 10% cash discount. Vendor is getting 900, right? Where is the $1,100 going to go? To this account. Okay, as discounts given to the vendor because you're paying only 900, and then the vendor you relieve the $1,000 open item, right? So relieves 1,000, 900, 100 goes to this account.
So like does it act the same way in accounts receivable when there's a tax applied on a specific product that you sold? It goes into the tax account one rather than zero. Yeah. $100 worth of product that you sold for 110.
Same thing, yeah, customer, yeah, same thing, yeah, same thing. Yep. Yeah, here we gain money, over there you're losing money, you're just giving away discounts. Same concept. So you should be able to see, if you configure all these things, you should be able to, when you run a front end, you should be able to see these accounts being hit, being taken in your actual, not exception list, but in the payment list, you should see all these GL accounts being hit. Account exchange rate differences. We talked about OBO, right? So when you invoiced at $100, euro, now it's a different rate. Which account? Same thing. Go to outgoing payments, global settings, define account rate, put in INT, and you put in the GL account. So loss or gain goes to realized goes to 1, and then unrealized goes to the other.
This exchange rate part, usually the company actually wait for the month end, right, in order to get average of that specific transaction that took place. For example, transaction taking place between USD and INR, and the company actually takes the transaction on the first, and the 30th or 31st, it actually takes the average of that month.
You can take the month end rate, yeah.
Increase
Mhm.
price value, then actually that goes into what the assessment or the adjustment account, or because
When you're actually, if it is the real money, it's the real rate. It's not the month end rate.
okay.
When you're actually sending a wire, it's today's spot rate. It's not your month end rate. Nobody's going to accept your rate.
Yeah,
People are going to accept today's rate. So the difference here is what you actually paid, what says what you think is the rate. The difference goes to.
So what I'm saying is the exchange rate of that specific day when the transaction took place is the day you actually received the payment, everything was adjusted. Is that what?
Yeah.
Okay.
Yeah, the difference is, yeah, I mean, on 30th of a month, you received $100 invoice. The difference between let's say 1 to 10 Mexican, you received $1,000 in Mexican peso, and it's 1 to 10. That means it's $100 together 31. On the first, you run the foreign currency gainer class. So basically, let's say you gained a penny, but you took net 45, so you month and a half elapsed. The Mexico peso, let's say, devalued. It went to 20. So that means you actually have to pay less money to those things. So the realized ones goes to this 47001, but when doing the valuation at the month ends, it's going to go to the 472002
So
account.
the would actually recognize the actual.
Okay.
Right.
So the foreign currency loss or gain, it is a realized one, and then another one is the unrealized, and then you make a balance sheet adjustment, and then the rounding differences, you do that, and then any bank charges for ACH wires, you charge it to 4701003, and any payment blocking reasons, right? Because it's pending invoice verification, it's pending payment clearing, it's pending whatever reasons you have, you can put the payment block reasons. And then you have the tolerances, right? Customer vendor tolerances, which we looked at. In this case, for company code, it's at the company code level. Permitted payment difference is $100 at 5%, or you can also have it at the vendor level. Payment differences by reason. This is the FBZP we already saw. And then the last one is actually the forms. So for everything, EDI, ACH, you have a lot of forms and IDOCs that you have to set up behind this. These are all these things. These are all these things. Let me see if we can show you the W20. I don't see any, but usually typically you see some payment IDOCs for both wires. They usually called P, start with a P, PAY, MA, something like that. And then as soon as you run F110, if it's a wire, you see an IDOC right here. The IDOC gets go to the file, and then you have to watch, multiple steps, and then out the door, and then you configure in W02 for the vendor, and then it goes through. Well, I don't see it here. So let's see.
In the configuration part, probably you might be weak.
I'm not sure this is the one. Yeah, all this, everything is standard IDOCs. Yeah, there is no customization on this side. Everything is standard IDOCs. You WH20, pay for this particular vendor. This is the message. This is the message type, and this is IDOC, and just automatically when you run their front end, creates this IDOC.
You just need to select what
Yeah. Yeah, it should say pay ext message type.
for all of the payments.
Yeah, usually for the bank payment, for wire payments. Yeah, right. In a F110, yeah, you're paying a vendor invoice, but you're not paying to the vendor. You're sending it to the bank. So usually the document goes to the bank, not to the vendor.
For the request of payment.
Yeah, ACH payment. Yeah. That's why it's usually right here in the payment type B,
So
the bank.
that will be going one day to the payment.
Yes, and the value dated tomorrow. Yeah.
Right.
Yeah, usually this is the one that gets created called pay ext. You can also search by this one.
Will be zero good.
It's not doing that.